Welcome back to Money Quest Lab. Today's deep dive: Taiwan Semiconductor Manufacturing Company, ticker TSM. The scanner scored it 69 out of 100. Raw signal is watch, but the final call is watch. The reason is the market environment, and I will show you exactly what has to change. Let's get into it. The scanner runs every stock through 4 criteria. Let me show you where TSM lands on each one. Composite score, 69 out of 100. First, leadership. This measures how TSM is performing relative to every other stock in the market right now. Score, 83 out of 100. That is strong territory. Solid relative performance. The stock is holding up better than most. Second, setup quality. This scores the technical pattern. Is the stock forming a proper base? Is the entry tight? Is there a clean risk level to define a stop? Score, 43 out of 100, average. The setup is not ideal right now. Wait for it to tighten. Third, fundamentals. Earnings growth, revenue growth, profit margin. Score, 80 out of 100. Strong. Strong numbers across the board. Fourth, relative strength rating. This tells me how the stock has performed over the last 3 months compared to every other stock. Score, 86. Meaning, TSM is outperforming 86% of the market. Above average momentum. Add all 4 scores up and the raw signal is watch. But there is one more layer, the market environment filter. I will explain exactly how that changed the final signal when we get to the verdict. First, let me show you the actual price chart. Now the price chart, built from live market data. TSM is trading at 434. The 52-week range is 220 toes to 479. It is 9% below its 52-week high. Enough room to run. Not so far, it is broken. Price is above the 50-day and 200-day moving averages. The long-term and medium-term trends are intact. RSI is 50. Healthy momentum zone, not stretched. Now, let me give you the exact trade numbers. Entry, stop, target, and the risk-reward ratio. Here is the swing trade plan for TSM, built from today's close and the ATR. Entry, near 438 hours. Stop loss at 404. That is 7% below entry. Size to 1 times the 14-day ATR. Target at $474. That is 9.1% above entry. Size to 2 times ATR. That gives us a risk-reward ratio of 1.3 to 1. At the stock's recent pace, the target range is roughly 5 to 31 trading days out. The key discipline here: know your exit level before you enter. A trade without a stop is not a trade. It is a hope. Important note, earnings are in 4 days. Either size, this smaller than usual, or plan to be out before the report. Earnings is a binary event. The best chart in the world can gap down 10% overnight on a miss. Now, let me answer a completely different question, one that matters even more for a lot of people watching this. Is this a company worth holding for years, not just weeks? Because that is a very different decision, and it deserves its own answer. Now, the question a lot of people ask, is Taiwan Semiconductor Manufacturing Company worth holding long-term? Not just as a swing trade, but as a multi-year investment? Let me walk through the fundamentals. Earnings are growing 58% year over year. That is genuinely strong, the kind of growth that attracts institutional money. Revenue is growing 35%. The top line is moving in the right direction. Profit margin is 46.5%. Excellent. The business keeps a lot of what it earns. The forward PE is 22. Fair valuation. The market is not pricing in miracles. Wall Street consensus from 18 analysts is a strong buy, with an average price target implying plus 113% upside. Remember, analyst ratings lag the price and are almost always bullish, but the direction matters. Debt to equity is 18, manageable leverage. The fundamentals tell you whether the business deserves your capital over years. The scanner and the chart tell you whether right now is the right moment to act. You need both. So, let me give you the verdicts. Swing trade first, then long term. Swing trade verdict, watch. Taiwan Semiconductor Manufacturing Company scores 69.0, constructive, but not a full buy signal yet. The setup needs a little more confirmation before the risk reward is ideal. Keep it on your watch list and wait for the entry to tighten up. With earnings only 4 days away, the risk profile is higher than usual. Factor that in. And the long-term verdict on Taiwan Semiconductor Manufacturing Company, strong buy. strong fundamentals, plus analyst upside, plus reasonable valuation. The fundamentals are strong. Analysts see meaningful upside and the valuation is reasonable. If you're building a long-term portfolio, this is the kind of name that earns a position. Dollar cost average in, not all at once. As always, these are facts and analysis, not advice. Your financial situation is unique. Do your own research before you invest. That is the full breakdown on TSM for Q3 2026. Swing trade plan, scanner score, and the long-term investment picture, all powered by live market data. If this analysis saved you time, hit like and subscribe. I publish a new deep dive every week. Drop a ticker in the comments and I will add it to the queue. See you in the next one.